we're diving into the metals. What's silver doing? What's gold doing? Has there been any change in my downside targets of 35 to 3600 on gold, or potentially as low as $50 or just below on silver? So we did see a bounce last week, and again, that coincided with a weaker jobs report, which again means there's less likely a chance of rate hikes, which is negative for the precious metals. And also the dollar fell back, which had been at key resistance. So all of these factors here we'll watch and see, but really the charts are my insight. So as always, folks, I want to dive right in. All right. So here's your gold chart, right? And what we see very clearly is we remain inside what we call a wedge pattern. Wedge patterns are two trend lines that are converging, essentially forming a triangle. Price tends to want to stay within those lines. For instance, you can see starting the line up here, it connects right through the high here in March, then through the highs in May, again in late May. And the question is, will we see a push up into this line in early July here in the next few days? Now, if we do, we know right away that that level is going to be resistance, right? It just makes a whole lot of sense. You can see how price has been defined by this descending trend line that is the top of the wedge pattern. Likewise, we have this trend line, which I found fascinating. Generally, you do the wedge, you don't have to connect it through. But when it does, I think it's just amazing to view how the charts work, how this high pivot becomes a staple of the wedge. And it goes right through this little point where we broke out above it. We kind of retested right there. Then we popped up. Then we came back, retested. Then we had our monster surge in gold to 5,600 before finding our way back down to the low end of the wedge again and again and again. And notice how many times we hammered on the low end of the wedge here. 1, 2, 3, 4, 5, 6 days in a row, every day tagging this line before we finally went to the path of least resistance, which was to the upside, and of course, coinciding with the price action and the jobs report. Now, again, just to look at the US dollar here, if we do the DXY, notice how the dollar has played a key role. Driving gold down, we've seen the dollar grinding up, but then look at the pullback in the last few days or so, and that dollar pullback has helped gold catch a bid. Likewise, if we look at the 10-year yield, the 10-year yield pulling back as well, which again, you could see again that retrace pulling back. This general trend has helped support gold just a little bit. All right, so a couple things here. So number one, as we go back into the chart of gold, we want to say, all right, well, if we push up here, will we break out? And the general rule of thumb in technical analysis is that number one, monitor the amount of hits of a trend line. The more a trend line hits, the weaker it becomes. All right, that doesn't mean it's going to break, but you want to be aware of that. Usually the second hit, the third hit, no. By the fourth hit, the odds of a break one way or the other are about 50-50, right? So again, you start to say, all right, well, have we hit 4 times? If it's 4 times, it's a coin toss, right? And that goes on both the descending upper trend line of the wedge as well as the lower trend line of the wedge. Now, we can look here. We have, this is our first point, our second point of contention, third point, and fourth point. So this would be our fifth hit, which starts to increase the odds of a breakout. Having said that, we haven't broken out yet. So it would maybe be about a 50% or slightly better chance that we could break out here, or we will at some point in the future. Likewise, we have, this would be considered our first point. This is just an intriguing aspect, but we have our low pivot 2, 3, 4, and also 5. In fact, I want to put in an arrow down there, and we can just put 1 for that whole group, because that just counts. Just like this just counts as 1, this is just 1, all of these hits, because it's all in a clump. All right, so we're really at this pivotal point now per the charts, right, where gold is getting to a point where the head of the wedge is coming to fruition. And if we look and understand wedges, the way they generally work, you have your downslope here, and I'm just drawing a rough wedge, right? And we have our price action, and it's getting squeezed inside of this wedge pattern tighter and tighter and tighter. Now, what's important about that is the tighter it gets squeezed, eventually when it does break, it's usually a major breakout or major breakdown. In other words, what we can surmise by the price action here in gold is that if it breaks to the downside, it's going to be a big flush down to probably that 36, 3,500. Or if it breaks out, it's going to start a very big move to the upside. Now, it's not going to be like a 1 day move, right? Just like down here, if it breaks down, it's not going to be a 1 day flush to 35, 3,600. But what we do know is that you're coming to the head of the wedge where price, per this diagram up here, it's going to make its decision, right? It's got to make its decision to break out or break down. One or the other is going to occur by the time the head of the wedge forms. So basically what we're seeing here, based on the technical analysis, I'm just extending the line out a little bit so we come to a head, is that by early August, so basically gold could stay in this wedge pattern without a decision for about 1 more month. That's the maximum. Now, the reason it's the maximum is because once it comes to the head, it's going to have to close above or below, right? I mean, there's no way it can stay in there because the two trend lines are going to intersect and then start to diverge again. So you have until about mid-August, until a breakout. Now, I don't think it waits that long. I think we probably know by the beginning of August which way it goes at latest, because again, once you get over here, it's very much like, okay, well, it's so tight. I mean, all it takes is a close above or below. But that's really what we're looking at now. Now, I will say this, my bias still remains downside on gold to that 35 to 3,600. I still think, again, in general, there's still some pressure and some flush out that is needed. But we're now at a point where we got below 4,000 per ounce, where gold is intriguing as an accumulation zone. I guess we can call that, right? Right down here, I even said that. I said, listen, it's a rounding error. If you're like me and believe that gold eventually, within a few years, is $10,000+ an ounce, doesn't matter if you buy at 3,900 or 3,600. I mean, $300 variance. I mean, it's a small percentage difference if it's really going to that 10,000 level.
Recent price action in the metals market has been influenced by economic data, currency movements, and shifting expectations surrounding monetary policy. A weaker jobs report helped trigger a bounce in precious metals, while a softer US dollar provided additional support for gold and silver prices.
Likewise with silver. I mean, if silver is going to be $150, $200, $300, 50, that got down to about 56 versus 54 versus 52 versus 50. If it's going up that high, it becomes that rounding error at that point. Okay. So again, just to summarize, we're going to be watching in the coming week this level here, which is now around the 42.50 level. If it gets there, does it break out and does it confirm? That would tell me, okay, game on, wedge breakout, look for the beginning of a bigger bull move, a la something like this, right? Eventually getting back to its all-time highs. On the other side, if it gets rejected and it comes down and confirms below this line, outside of the wedge, let's say below 3,900 here, you look for that final flush out into the 35 range, right down in this range. And that then eventually, I think, sometimes markets like to give you that last big flush out to kind of scare everyone and get everyone max bearish. And I look at that as being the potential for the break. But the beautiful thing about it is that we're going to know we have two trend lines, right, forming this wedge. The breakout or breakdown are very clear. A breakdown just gives me a great buying opportunity. A breakout says, okay, it's game on, and we're headed back to the highs within, let's say, 6 months, 12 months, and likely to that 10K within 2-3 years out from now. And so really my overall mid to long-term bias is bullish. It's just this shorter term period now, which we're coming towards the end of, which is very exciting for me. Listen, when we were at 5,600, even above 5,000, I kept on telling people gold's going to flush out here. It's just the signals, the divergences, you had all the technicals pointing to downside. We're now at a level where it's getting close to a bottom if it hasn't already reached that, which is exciting. So I'm still on the short-term one more flush out to just wipe out those last kind of few people that are kind of, the wishy-washy people that got into gold to get rich quick. But once that happens, to me, it's an accumulation. Now, listen, nothing's going to be easy. So as we all know, chances are, it'll throw us a few curveballs along the way, but that's okay. I don't mind that. Curveballs is how we get to be good seasoned investors and traders. All right, let's go to the silver chart here. Silver continues to be a little bit weaker than gold, in my opinion. And the reason I say that is you have this very clear trend line, which, remember, I had this labeled as a support at 64. And then once we broke and confirmed, here's your breakdown candle, here's your confirming candle, that now becomes resistance. Now, if silver can reconfirm above, that would be step one in showing relative strength. But for me to really buy that it's a new paradigm, a new breakout, a new bull run, we would need to confirm above this trend line, right? That's the obvious trend line there, which is all the way up at 72. And it's also, interestingly enough, if we look at the chart here, we can see that, again, this level here is very, very important. That 72-ish level, low pivot, we kissed it here, and it's also this high. So this area, really, I mean, this is step number one. That's, you got to get above that to even have a shot at it. But this is the one that if we could break above 72 and confirm, okay, now we can say the chart has now flipped, in my opinion, from bearish to bullish. But right now, is silver bearish? Yes, absolutely. Still below this line at $64, $63 per ounce. And again, even though it's bounced up, it hasn't recaptured and reconfirmed above there. Now, let's finish up with silver here real quick. I'll do a video, platinum and palladium, oil and nat gas in the coming days as well, for those of you that are interested. But right here, folks, again, that's your level to watch. I still think silver is headed lower. Remember, it doesn't have anything to do with, well, inflation adjusted, silver should be higher. Remember, short-term price is ruled by emotion. So this is your first level around 54. And really, this would be my washout levels, 50 pierce, maybe down to 46.